It is time for this week's Cattle Call here on the Nebraska Rural Radio Association. And once again, today's Cattle Call is brought to you by Wolf Auto, Small Town Strong. And quite a few different storylines to talk about today. Not only just the marketing and the production side, but we have some other headlines that definitely do affect production to talk about here this week. And that's immediate things happening right now. Here to break down everything, it's Brad Kooima, Kooima and Varilek there in Sioux Center, Iowa. Brad, we'll get into the week's news and things like that in a moment. First of all, just again, a quick recap from last week. Again, how did you see the fat cattle market kind of playing out, and to what end last week?
Absolutely, Chad. Thanks for having me on. First of all, it's my pleasure. I enjoy doing this with you. The cash market last week exceeded my expectations. I thought we were going to be a little higher, but we basically put on another $5 or $6 on the north. But I thought it was maybe so 242 was the bulk of the trade in my neck of the woods. There was maybe a tiny bit of 243, and my neck of the woods, by the way, is Northwest Iowa. There was a little tiny bit of 244 out in Western Nebraska. Now, what's been the feature to the market and has been for a long time is that the South is lagging behind. There was a little nuance to that last week and again this week, and that is midweek, and that's happening again this week. The South all starting to kind of wake up and smell the coffee, as it were, a little bit. And, ended up trading cattle at 232, which for them was a lot higher. And then a few cattle traded late Friday at 235. So instances as much as almost $10 higher in the South. So, clearly that was, fueled the rocket here for Thursday and especially for Friday, sharply higher on the front end of the market, chasing down that cash market, and especially chasing when you're at this big of a discount. Now, Chad, this week, we've seen the South come, nothing really trading in the North yet, as is typical of a Wednesday. But the South, there's already trade instances, 238, 239, and even just a handful of cattle at 240, which would be another, 3, 4, 5 higher than last week in the South. So maybe that's what we're going to do, narrow that spread a little bit between North and South. But it certainly feels like we got an encouraging feel to the cash market.
Yep. And one of those things I noticed too, again, we've tracked this a while, deferred deliveries, they always say they want to try and get some cattle around them. They just have not been successful to do that. Last week they didn't. And so that storyline kind of continues, doesn't it?
It's a great question and comment there, Chad. It's something that, I'm trying to be sensitive to. It doesn't seem like they're able to get their arms around this thing. I mean, I'm sure if you were in the boardroom of that meeting every morning, how are we going to get cattle bought this week, guys? They would love to get out here and get a couple, 3 weeks under their belt so they wouldn't have to chase as much. I thought there was a little more aggression on the part of a couple of at least the big four last week, trying to get, cattle bought all the way into the first week of July. But, early indications, well, look at what's going on in the South. It looks like they still don't have their needs met. And there's just not enough cattle to go around. I really think that's really the simple truth to the whole thing.
Yeah. And there was something else I noticed here this week. I had somebody mention it to me that the Fed Cattle Exchange, the internet auction, was active middle of the week here. When that came on the scene, that was kind of one of those deals that it kind of tried to set the market. It tried to be the market maker. And then it kind of fell back into the background a little bit. And this is the first time in a while that I've heard it kind of being up front again, huh?
Excellent point. You are 100% right. I was, in the room where it happened, if you want to call it that, when the NCBA and the guys in the South, forged this idea, which I was 100% in favor of. I'm in favor of anything that increases negotiated cash, particularly when it's transparent negotiated cash, right? And what better way to do that than an auction? It stumbled badly, went under some new ownership, different thing anyway. But you're right. That's where this 238 and 240 happened on the Fed Cattle Exchange of all places. I got to, sarcastically and smugly say, maybe if we'd all negotiate a few more cattle, maybe everybody would have that flat price. Of course, we all know that there's a number of turning cattle in the South, much more so in the North. And when a packer doesn't have to bid on them, the fact that they'd be a little bit discounted does probably make some sense. So no, it's fun to see, the system actually work for a change. Absolutely.
All right. Let's get to our listener questions and our viewer questions. We've had a few that have popped up here over the last few weeks or so. So let's try and get to a couple of those here. First one, again, what is the job of the market, right, Brad? It is to encourage or discourage production or consumption. It can really go either way. But with what's going on right now, at what point does the cattle guy, especially the cow-calf guy, get encouraged to expand their herd in order to try and meet some of this demand that's out there?
I enjoy this question, comment, whatever it exactly is. It's a little higher level thinking, and that's fun to talk about, Chad. This person is correct. One of the roles of the market is to go to a price high enough to encourage production and probably discourage consumption, or to go to a price low enough, how about like corn, where we discourage production and maybe see an increase in the amount of demand. In other words, you're going to use more $4 corn than you're going to use $6.50 corn. It's pretty straightforward. Okay. Now as you relate that into the cattle thing, that's what to me is kind of fascinating about the difference in the cattle compared to something like a hard commodity like corn. There's other things that are going to incentivize or disincentivize somebody from holding a heifer. And number one is your wallet, in my opinion. Okay. The profitability, the desire to maintain an operation. You've taken this cow kill down to a bare bones, the lowest cow herd since 1951. Everybody knows that. So if you're going to still be a rancher, you've got to save some heifers. So there's some of that. So it's economics that drive this decision. And maybe more important than economics is grass, feed. Is it raining enough that you dare to go ahead and turn out cattle? I mean, I know there's guys west of your spot earlier this year that didn't even dare to turn out calves to make yearlings because it was so dry. Now you've had some rain. One robin doesn't make it spring. I know you need a lot more, but that to me, whether you get enough moisture in this grass country to allow those people to have the courage, first of all, to make that decision, they'll do it. What we've seen statistically on this heifer retention thing is it's about 1 to 1.5% more retention than a year ago. I didn't say that right. We've got roughly 37% as a percentage of steers on heifers on steers, and a year ago we had 38.2. Okay, not a dramatic difference. Slight retention, very regional to the places north of where you are, north of where I am, to where they've been getting rain. And otherwise, the incentive for these guys to sell a $2,400 heifer calf is pretty real. And the age of the rancher is a big factor in that too. So some of these guys are saying, hey, this is my ticket out of here. But he's right about the function of the market. We've certainly gone to a price high enough, in my opinion, to incentivize it. Now it's just a matter of whether they got the feed to do it.
All right. And then the other question that we had is somewhat related to that as well. And it kind of has to do with what is really pushing this to the effects that we've seen it so far. Is it purely a supply question, or like this person argues, is it really the consumer pulling? Does the consumer have such a great beef eating experience that they're doing it over and over and over again, Brad?
There's a lot of to unpack on that question. I'll try to do it quickly. I know we've got time here, but last year on this program, the first 2 weeks of January, I made a comment that, you know what, got all the data, slaughter data in for 2024, and take a guess on what the percentage of actual slaughter was compared to the year prior to that. And okay, spoiler alert, 0.1% less steer and heifer slaughter. So fed cattle slaughter, taking the cows out of it, taking the bulls and all this stuff, but doing the fed cattle slaughter was 0.1%, very negligible. Average weights were a record high almost the whole year. Beef production was still bigger than a year ago, year on year from 23. So the 24 rally was it supply? No, it was not. It was demand. Demand was excellent through the whole thing. Now, was there something to the supply side? Of course there was, because futures are guessing what's going to happen and don't wait for it to happen. If they see the tighter numbers coming, it's likely that the market rallies into it, and that's what the market did. We could see that the tightest numbers indeed were right about now, and just like the market's going to say, well, they're starting to save heifers. It's not bearish today, but you'll start to see the back end of the market tipping over. Is that what's going on here today and yesterday? I think probably yes. We're down $1 in the back months. Okay. So the other part of that demand thing, though, I need to throw in this because I believe this strongly. That the one positive thing that came out of COVID, Chad, was you for a generation or two, maybe they figured out something that I bet you do. I grill year round unless it's 50 below, but even in January we grill. When the restaurants were all closed during COVID, they YouTubed a video, how do I grill a steak? And they did it. And it was amazing. They couldn't believe how good it was. Maybe better than they could even buy. And they found out they could do this 2 or 3 times a week for what it was costing them to go out once on a Saturday night. So that domestic type home demand, that needle moved something like 8-10% from what it had been. And I think that's still part of the story on the good demand thing. But I think now we're rallying because of tight supply. Demand seems to be good. But if demand was really good, you'd have a packer that's making money. I mean, he doesn't have margin here. So now we've got into the tight supply. Now we're killing almost 5% less year to date. So last year, I would say largely demand. This year, now we're coming into because the supply is so tight.
Okay. Now, you mentioned the packer, and that's kind of one of those news headlines for this week is the fact that, ICE has been active in several areas of the country. It got a lot of headlines out west, but it did affect Nebraska. Can you talk a little bit about how is this affecting Nebraska and specifically what this means for the beef supply chain right now?
Absolutely. One of my partners, Joe, likes to say the first time you hear it, it's bearish. The second time, it's not. And talking about a news type item that's new. And I think he's right. This is something that we dealt with at the beginning of the Trump administration, this aggressive deportation of illegals. And we were worried about the ability are we going to be able to run these packing plants normally, knowing that that's a large percentage of the employment force is there. So you're right. They were all over Nebraska. I understand Schuyler, Grand Island, Omaha. Now, I need to clarify that to my knowledge, none of them have been in a packing plant. ICE has not physically been in a packing plant. But these packing plants are experiencing absenteeism. I know that one of them this morning, I was told that 25%, well, actually 2 of them, I heard it from regionals that there maybe approximately a 25% absenteeism this morning. I know there's one 2 small packing plants that didn't kill today at all because they had such absenteeism. But we're talking about, very small, right? Where there's 25 or 30 employees, not 2,000. So the issue is real if that's your place, isn't it? Now, I hope, like the first time this was news, that we get to a point where we go, okay, they're looking at the murders and the drug dealers and we're not looking for everybody that works in a packing plant. They're trying to, just the most violent criminals. And the last time the issue kind of calmed down and we went back to normal. And I'm hoping that that's the case this time too. But Chad, it's just weird. This is 3 Tuesdays in a row where we got to deal with something, right? Screwworm, plant closing, and now the ICE raids yesterday. So I don't know. I guess buckle up next Tuesday. We'll see what the news is then.
Yeah. Maybe we could have folks put comments. What do they think is going to happen next Tuesday? What'll be the next thing? And speaking of doing that, if you have a question that you'd like us to address, please put that in the comments below. We'd love to address that on next week's Cattle Call or in the weeks ahead. We've kind of talked about what's already happened here this week. I guess, Brad, is there anything else left to be said about the markets and where we're at right now? What do you kind of expect here through the rest of the week?
Well, there's obviously tariff chatter again today. At least Trump's talking one side of it. We'll see if the other side of it comes out of it. I guess I'd be anxious to see what happens here with the cash in the north. If we stay that big premium, that means we're going to last week 242. That means we could be testing 245 or something like that. That's another week we rip off the calendar. That's another week where we get closer to convergence, and the June cattle still look undervalued. So I don't believe. Barring some sort of completely unexpected event, I still don't believe that there's enough cattle here in the north to fuel the engine that the packer needs to have. And so, as the north goes, so will the market, like I like to say. So at this point, I think in the short term, the market feels like it's in good hands here, particularly the cash.
All right, very good. Brad, it's good to talk to you. Thank you so much. Great to have you on the show again. Again, that's Brad Kooima and Varilek there in Sioux Center, Iowa. Give us your contact information. Oh, there it is. kkvtrading.com, 712-722-0023 if you'd like to reach out and talk to Brad and his team. That is this week's Cattle Call program. It's a production of the Nebraska Rural Radio Association. It's brought to you by Wolf Auto, Small Town Strong. Thanks for joining us this week. I'm Chad Moyer.